Hey guys, we're here to talk about three numbers today in real estate versus interest rates. The three numbers today are $80 a month, $400 a month, and $5.5 million. My goodness. Hi, it's Jerry McManus from Keller Williams. We're here to talk about herd mentality. Herd mentality. What do I mean by that? It seems like everybody is going in the same direction at the same time. So going back to our three numbers that we talked about in the intro, it's going to be a very important point. The first number I want to talk about is $80. Because one of the things that's happening in the herd mentality right now is that there's a lot of people that are out there and they're saying to themselves, I want to wait until interest rates get down into the high fives before I buy a house. What is wrong with this thought? Well, that leads us back to the number. It's 80. So based on a $400,000 sale price, $80 is the amount of money that you're looking to spend where interest rates are now to where they would be in the high fives. Is it worth it? People have this thing in their head that they have to get to a certain point before they really can execute on their plans. And I'm here to tell you, after 22 years in this business, that's a really bad way of doing it. The question should be to you is, can I do this and can I do this effectively today? And the reality is, using that $80 as our example today, what does that break down to you as an individual or a couple on a per day basis? So we're looking at less than $3 a day. I have to ask the question to you this way. Do you really need another $3 a day to be able to afford a house? If the answer to this question is yes, then maybe you should not be shopping in that price range that you're looking to do. And that's one of the things that I really don't like seeing whenever I sell people houses, is that they get in over their head when they go and they spend too much more money. But the reality is that this $80 difference is a rounding error when it comes to a monthly payment. So why is it that you are so consumed by it? Because like I said, I've seen plenty of people do that. The second number that I want to talk to today is $400 per month versus the $80. That seems to be a little bit more dramatic a difference. And then when you save that kind of money every month over the space of say 15, 20 years, it does add up after a while. But I'm going to point this out to you is that since May of this year to this point now where we're at, interest rates have come down so that on the average sale price of a house, which is, we're using $400,000 as our starting point, you are already saving that $400 a month. So the reality is by waiting, you already have achieved a good part of your goal and we do know that the interest rates started to get a little higher versus what the asking price of the houses are. So one of the statistics that we know about today is there are more houses on the market. Things are now working in your favor, that you have both a lower payment and more selection. So that's a good thing, and kudos to you because you did do that waiting. But the third number that I wanted to talk about today is that $5.5 million. So what on earth is that when we're talking about buying a house? Very simple. Just wanted to remind you, please hit that subscribe button and the notification bell, because I've noticed that a lot of you that are watching these videos may be missing out on important content. Let's not have that occur. So please hit that subscribe button and the notification bell so that we can stay in touch. And let's continue on with this video. That's called the pent-up demand. And what do I mean by that? Is that there's many people like yourself that are thinking, I'm gonna wait until the interest rates go down to the high fives before I buy the house. Well, ladies and gentlemen, I hate to break the news to you, but there's a 5.5 million people that think just like you. And this is what we were talking about in the beginning of the video, where I'm really concerned about people and a herd mentality. Because if you do indeed wait that long period of time, or whatever that period of time is so interest rates get down into the high fives, guess what's going to happen? You're going to have so much competition for the houses that you want to get. What do you think is going to happen to the price of the house? You got it. The price of the house is going to be bid up. And therefore, what happens to that savings that you thought you were going to have when you decided you want to wait until interest rates get down into the high fives? The reality is that you run a very real risk that all those savings that you are going to have, that they're going to simply evaporate. So that's why then I go back to the original number, the $80. Is it really worth the potential pain and aggravation of losing bid after bid after bid if really what you're looking to save is $80 that you may not actually save anyhow because you're bidding up prices once again? So that's a lot of food for thought, but I really do want you to consider this. Even in life in general, we know that the herd mentality does not win in the long run. So the question is are you going to take advantage of what you already have dealt to you, or do you want to risk being outbid time and time again like we saw a few years back in the market? Thanks again for sharing a little bit of time. Again, feel free to give me a call, but don't forget to hit that like, subscribe, and the notification bell so that we can stay in touch for the future videos. See you on the next video. Hey guys, don't forget to hit the subscribe button and notification bell. This way we can stay connected. Here's my contact information should you have any questions. Otherwise, I'll see you in the next video.